Hi, good evening, everyone. Thank you for joining tonight's Corporate Connect webinar organized by SIAS and supported by the SGX Group. My name is Gerald, and I'm very pleased to be your host for today. For tonight's Corporate Connect webinar, we have with us Food Innovators Holdings as well as audience from YouTube Live. So for those of you who might not be familiar with Food Innovators Holdings, it is a growing F&B focused corporate group with two core businesses, which are restaurant leasing as well as the ability to do food retail across Japan, Singapore, and Malaysia. So some of the brands that you may have heard of or even have previously eaten before would be the Tempura Rice Bowl restaurant, Tendon Kohaku, Unagi Itri Manman. So those are some of the brands that come under Food Innovators Holdings. We will have the management of Food Innovators Holdings sharing their company's latest updates, as well as answering the questions that you might have later. But just before we invite the management team of Food Innovators Holdings, I will just provide a very quick overview of the market outlook. Okay, just a bit of disclaimer that the sharing today is for informational purposes only, because it is not tailored to your individual investment objectives and risk appetite. It should not be taken to be financial advice. Okay, I think for many of us who follow the Singapore market closely, what you may have noticed is that the Singapore market has done very well over the past 12 months. For the benchmark Straits Times Index, we are close to a all-time high. We recently went above 4,300 points for the STI. There's been some correction since then, but with the bounce in the market today, we are back to above 4,300 points once again, representing close to the record highs. What is driving this positive sentiment towards the market? On the global front, we have recently seen news that the US Federal Reserve has cut its benchmark interest rates, and that is generally seen as a positive for equity markets because it reduces the cost of borrowing for many corporates. It allows more money to be flowing in the economy. So as a result, we have seen the equity markets having a bounce in anticipation of the rate cuts, as well as after the rate cuts. Not only that, we see many investors continue to expect more rate cuts to come through for the rest of this year. So based on the latest expectations, there are investors who expect one further rate cut in October this year and one more in December this year, which would mean that interest rates can potentially be 0.5% lower compared to where it is today by the end of this year. So the interest rate cut expectations is helping to drive improved sentiment towards the stock market as well. So apart from the boost from the interest rate cuts in the Singapore market, we also see increased demand for some of the Singapore stocks following the announcement by the MAS around different measures to boost the Singapore equities market. So one of the measures announced would be a 5 billion equity market development program to strengthen the local fund management ecosystem, where the fund managers will use this 5 billion of funds provided to invest in Singapore stocks, including some of the mid-sized companies listed in the Singapore stock market. So apart from the benchmark Straits Times Index, we've also seen quite a number of mid-cap stocks in Singapore doing well so far this year. This is a chart of the FTSE ST Mid-Cap Index, and we have seen that not only has the STI done well over the past 1 year, the mid-cap benchmark has also done well over the past 1 year. And I believe that is the reason why many of us are here today to understand more about Food Innovators Holdings, to also understand whether it can be one of the names that would be an undiscovered gem in the Singapore market. So some of the statistics that we have seen is that the FTSE ST Mid Cap and Small Cap Index have seen higher trading activity and net insti inflows since May this year. Over 80% of nearly 120 non-index names recorded increased trading turnover. The close to 120 non-index mid and small cap stocks have also attracted over 100 million in net insti inflows since May this year. So some of the examples of stocks that have seen increased institutional buying would be UOB Kay Hian as well as CSE Global. So for UOB Kay Hian, we saw the PE increasing from 7 times to 10 times. And for CSE Global, the PE increased from 11 times to 16 times. Okay, so this is a further list of names that have seen significant institutional inflows since May this year. I mentioned earlier UOB Kay Hian and CSE Global. But apart from these names, we see companies across different industries, including the industrial sector, oil and gas sector, consumer cyclicals. And that is one of the reasons we have seen the mid-cap index actually having a bounce over the past 12 months. The other key development for the Singapore market is just last week, SGX launched the FIH Singapore Next 50 indices to give investors a clear view of the opportunities beyond the Straits Times Index. So there were two versions of the index that were launched, the FIH Singapore Next 50 Index, as well as the FIH Singapore Next 50 Liquidity Weighted Index. And they are meant to track the performance of the next tier of large and liquid companies that are on the SGX main board. The idea is to highlight the broader market segment and provide visibility into companies that might one day grow into the STI. Okay, so there are some design in the index, including how the selection of stocks would potentially include stocks that are listed on the SGX main board, but excluding the 30 largest companies by market cap on the Singapore market. Okay, next there are some liquidity and size screening, including requiring some of these names to have a minimum turnover of Singapore dollars 100,000 per day, minimum free float requirement of 15%. And based on that, the largest 50 stocks by market cap would actually then make it to the Singapore Next 50 indices. These indices are rebalanced quarterly in March, June, September, and December, so that we can look at what are some of the names that have grown in size and can potentially be included into the indices. Okay, so what are some of the names in the FIH Singapore Next 50 indices? Probably some of the familiar names to you within the industrial sector. We have got ComfortDelGro, SingPost, SIA Engineering. For financials, some of the names that have done well so far this year, like Yang Zhejiang Financial Holding, iFAST, UOB Kay Hian, as well as Propnex, are within the FIH Singapore Next 50 indices. Okay, next we have some of the consumer non-cyclicals like Sheng Siong, Olam, Food Empire Holdings. We have some tech names like UMS, Franken, Aztec. Some of the telco names like Netlink Trust, StarHub, healthcare like Raffles Medical, and consumer cyclicals like Riverstone Holdings. Okay, next we have the non-energy materials, names like Capital Infrastructure Trust. We have energy names like CSE Global. And last but not least, we have the REIT sector, which represent the largest number of companies within the FIH Singapore Next 50 indices, as well as having the largest weightings. So some of the names in here that might be familiar to you would include CapitaLand Escort Trust, Kappa REIT, Suntec REIT, Parkway Life REIT, as well as the recently listed NTT DC REIT. Okay, so in total, we see 16 REITs within the IH Singapore Next 50 indices with a combined weight of 44%. Finance would be the next largest with about 13% weight. Industrials would also have a 13% weight. And then we have some of the other sectors like non-energy materials, telcos, as well as consumer non-cyclicals. Okay, next, we'll probably be interested to find out the performance of the IH Singapore Next 50 indices. So for the Next 50 index, there's a 10-year average return of 5% per year. The liquidity weighted index has a 10-year average return of 3.1% per year, which is slightly below the return of the STI, which is 8.9% per year. But even with that, we have seen periods of time where the Next 50 indices actually outperform the STI. So for example, this year we have seen the Next 50 index having a return of 24.6%, the Next 50 liquidity weighted index having a return of 25%, which exceeds the return of the STI of 19.3%. So I think it is really at different periods of time where we see increased focus on the mid-cap names, where we see some of these mid-cap names performing exceptionally well, driven by some of the management turnaround of the company, driven by increased shareholder returns, as well as how they are able to communicate the value to investors. So I think with that, what I will do is to invite the management team of Food Innovators Holdings, because I think what many of us would then be interested to find out would be how the company has been performing in the most recent quarters. What are some of the initiatives that the company have taken on to be able to improve the performance, and what can investors look forward to? So joining us today, we are very pleased to have with us the management team of Food Innovators Holdings, and that would include Kubo, the Chief Executive Officer of Food Innovators Holdings, as well as the Financial Controller of Food Innovators Holdings. With that, I'll hand over to the management team of Food Innovators to be able to provide us with the updates.
Thank you, Gerard. Good evening, everyone, and thank you for joining us today. I'm Yasuaki Kubota, CEO of Food Innovators Holdings Limited. It is my great pleasure to introduce our company and our business. First, I will briefly explain our background and business model, and then our financial controller, Mr. Shuji Sakurabashi, will explain the details of our operations and financial performance. FIH was listed on the Catalyst Board of SGX on October 16, 2024. We chose Singapore as our base zone to expand across Asia. Our group has two main businesses. The first is our subleasing business in Japan. The second is our restaurant operations in Japan, Singapore, and Malaysia. In Japan, we manage about 230 subleased properties. Subleasing means we rent properties from landlords and then sublease it to restaurant operators. Because we rent from landlords, even new venture restaurant owners can open restaurants in prime locations. To support business owners, we provide three models. First, simple sublease, a model where we rent from landlords and sublease to operators. Our income is the difference in rent. Second, hybrid financing model, a model where we cover part of the step-up cost, such as renovation. Operators start with less burden, and we recover the investment through rent payments. Third, co-management model, a model where we invest in the operation and share both cost and profits. In the past 15 years, most of our sublease business in Japan has been through the simple sublease and hybrid financing models. The co-management model has now developed into our collaboration model in Singapore and Malaysia, where we work closely with Japanese local operators. We also operate restaurants. Today, we manage 30 outlets, 14 in Japan, 9 in Singapore, and 7 in Malaysia. Our restaurants focus on Japanese food and Japanese-style European food. We tailor our concept to fit each local market. Malaysia is growing rapidly and is now one of our key growth drivers. In fact, tomorrow we will open another Kanbei restaurant in Malaysia. These two businesses create strong synergies. Subleasing gives us knowledge about properties and insights from restaurant operators. Running restaurants allows us to build brands and know-how. Together, these two businesses create a new business model, create a unique business model. I have been in this industry for over 20 years, and I'm now 50 years old. In 2004, I founded Foodies, focusing on restaurant subleasing. After a major acquisition in 2010, the group expanded to over 800 restaurants. But in 2011, our main bank went bankrupt, leading to Foodies' bankruptcy as well. After that, Food Innovators Holdings, which is now the Japanese subsidiary of FIH, took over more than 100 subleased properties and continued the subleasing business. We rebuilt the business, overcame the COVID-19 pandemic, and finally achieved our IPO in 2024. This dream came true thanks our colleagues, customers, investors, employees, and Singapore. All of them believed in us and supported us. Looking ahead, we want to deliver stable profits and good returns to our shareholders. Our next goal is to list on the main board of SGX, leveraging our experience in the subleasing and restaurant operation. We will grow steadily, step by step. We plan to expand mainly in Japan, Singapore, and Malaysia, and in the future, also in other Asian countries and beyond Asia. Our vision is to become innovators who create places where people can enjoy delicious meals and bring exciting new flavors to life. Our mission is to become a platform that connects the food and beverage industry across Asia and the world. While profit is, of course, important, our greater dream is to create a future where everyone can enjoy delicious food together. Finally, I would like to share a little of my personal dream. Together with one of our shareholders, Mr. Kazuyuki Ishihara, a world-famous garden designer, we studied a small children's farm and a children's cafeteria in Nagasaki, Japan. I hope to give children the chance to learn life skills such as growing food and cooking. If any of them choose to work in the food industry in the future, nothing could make me happier. We have a unique business model, a clear vision, and long experience in overcoming challenges. We believe these strengths will guide us toward steady and sustainable growth. Thank you very much for your attention. Now, I would like to hand over our financial controller, Mr. Shuji Sakurabashi, who will explain the details of our operations and financial performance.
Thank you, Kubo, and thank you very much, Gerald. I will explain the detail of our business model and financials. FIH is a listed company, is a holding company. Under FIH, there are 6 subsidiaries, 3 in Japan, 1 in Singapore, and 2 in Malaysia. One of the companies in Malaysia is a joint venture. Again, we started our business in 2011. We took over a subleasing business from the Kubota's former company. And we have 2 business models. One is subleasing, and the other is food retail, which is restaurant operations. Number of employees is now 214, including part-time workers. The number of restaurant is now 30. The food subleasing business is operated by FIJ, which is one of the subsidiaries in Japan. And for food retail business, it's operating in Japan, Singapore, and Malaysia. Oops. This is, sorry. Yeah, this is our management team. Yasaki Kubota is a CEO, and Furukawa Kazuteru is a chairman. And these are our executive officers. And I'm a financial controller, Shuji Sakurabashi, under CFO Tetsura. Next. Sorry, it's a little bit slow. Oops, let me change. Sorry, let me. Yeah. Yeah, sorry. This is a business model, subleasing. Subleasing is done by FIJ, Japan subsidiary. FIJ leases the restaurant premises from the landlord and subleases to restaurant tenants. And we take the margin between landlord rent and sublease and tenant rent. Monthly margin for the more than 200 sublease properties exceeds 200,000 Singapore dollars on monthly. That means we can get more than 2.4 million margin per year. So this is our stable and recurring income. This business model has advantages both landlords and tenants because the landlords trust FIJ because we definitely pay rent. So we can rent at a lower rate from the landlord. And it's also beneficial from the tenant because tenant sometimes does not have a credit, but we take the risk. So if the tenant cannot pay rent, we have to pay rent to landlords. This unpayment is covered by insurance. So we do not have we do not have a risk. And this is a food retail business. We have three types of business. One is directly owned restaurant. One is collaboration restaurant. And the last is F&B consulting. Directly owned restaurant, that means a restaurant is owned by us and also operated by us. It's mainly in Japan. Next, collaboration. This is owned by us, but operation is outsourced to a third party. It is designed to support our partners for overseas expansion. If a Japanese restaurant in Japan wants to go overseas, we can support because the Japanese restaurant does not have operation experience in overseas, but we have a lot of experience operating restaurant overseas. And FIH will do a capital investment for initial restaurant openings. And but the partners does not have to invest on a capital. Only the partners has to provide is a daily operation. And the last thing is, the collaboration model is done in Singapore and Malaysia. And lastly, we have a food and beverage consulting service. The restaurant is owned by a third party, but the restaurant operation is outsourced to us. So we provide daily restaurant operation of sometimes a menu development. So we don't have to do initial the capital capital investment. So these three are restaurant operation models. Again, in Japan, we have 14 restaurants, mainly directly owned restaurant and consulting. In Japan, we don't have a collaboration model. And Malaysia and Singapore, most of the models are collaboration. This is our restaurant brands. This is our annual report. In Japan, we have a directly owned restaurant. For example, yakiniku restaurants, and we have a license of Moomin Cafe restaurant operation. So we now have 2 Moomin Cafe restaurants. And we also have a EU restaurant. And this is a main Italian restaurant, Trattoria Niwa, and yakiniku. Under these are our consulting model restaurants. So these restaurants are owned by a third party, but operations are outsourced to us. And this is a list of restaurants in Singapore. As Gerald explained, we have several types of restaurants in Singapore. For example, Tendon Kohaku, Iyo, Mamman, Izakaya Kadohachi, Yakitori, Yatagarasu, Yomo, Izakaya Mikoto, and Yakiniku. So in Singapore, we provide several types of traditional Japanese restaurant by using a collaboration model. So this is not our original brand, it's our partner's brand. We outsource the operation to third parties. For the collaboration model, if we make a profit, the profit is shared by FIH Group, between FIH Group and a partner. And in Malaysia, most of the restaurants are collaboration. Only this, the bakery cafe is directly owned. And we have a Kanbei brand. This is a third-party brand, but it's a brand. This Kanbei brand has a ramen restaurant, a yakiniku restaurant, and a sushi restaurant. We are now focusing on the expansion of the Kanbei restaurants in Malaysia. Yeah, let's go back to the presentation. This is a milestone. We started a business in 2011, and in Singapore, we established a subsidiary in 2012. And in Malaysia, we established a subsidiary in 2017 and has been growing for both subleasing business and restaurant business. And in 2024, FIH Group was listed on the Catalyst Exchange on SGX. This is take a look. Let's take a look at a snapshot of FY25. Before I talk about the financials, let me tell you a fiscal year. Fiscal year end is February. So we closed FY25 February. So this is financials of FY25 February. For half year, it's August. So half year financials will be disclosed in the middle of October. So we cannot disclose the half year result of the FY26. The revenue of FY25 February is 43.1 million and gross profit is 6.1 million. And this is highlights of operational results. In FY25, we opened several restaurants, Kanbei Sushi, Agency, Yomo. And in FY26 year to date, we opened several restaurants. In Japan, we opened Yakiniku Hatsumi, and in Malaysia, we opened Kanbei in Johor Bahru, and we opened second Moomin Cafe, and we opened one restaurant in Japan, and we established a joint venture between Asset Frontier in Malaysia for halal ramen. This is a financial of FY25 again. Revenue for FY25 is 43.1 million. The revenue for food retail business is 24.9, and sublease is 18.3. For profit in FY25, we made a loss of minus 4.1 million. And FY24, it was positive or 1.4 million. This is breakdown by geography. For FY25, the Japan's revenue was 28.6 million. About 70% of our revenue comes from Japan. And Singapore, 6.6 million. And Malaysia, 8.0 million. As you can see, the business in Malaysia has been growing rapidly. Okay. Okay, this is a future plan for our food retail business. We like to use a collaboration model, and we'd like to expand in Singapore, Malaysia, and other Asian countries. And also, we now have a moving brand, and we now have a plan to open another themed cafe in Japan. And this is a plan for subleasing business. Our subleasing business is mainly in Tokyo metropolitan area. We like to expand this business other major cities in Japan. This is our advantages. We are a one-stop solution provider for restaurant management. We have strong ties with property owners and tenants. We know how to bring Japanese brands overseas and give full support with consulting. We choose the best sites and keep creating new food ideas for customers. With these strengths, we are well positioned to achieve sustainable growth and create a long-term value for our shareholders. Okay, thank you very much. Yeah,
Thank
Gerald?
you.
Yeah.
Thank you for your sharing about the company and some of your plans for expansion. Next, we'll go into the Q&A session, where we will take the pre-submitted questions as well as the live questions from our participants tonight. So for the participants who have joined us today, if you'd like to ask a question, please put your question into the Q&A box, and I'll be taking some of these questions later. So I'll start with some of the pre-submitted questions. The first question is something that many of us in Singapore have observed, which would be some of the headwinds that we see for the food and beverage industry. I think for many of us, we would see in the newspapers around some of the different difficulties faced by companies within the F&B sector. So the first question is, how will this impact your business, and what is the company doing to be able to do well despite the market environment that we are in?
Okay, let me answer the question. Given the market challenges in Singapore and in Malaysia, we remain confident in a disciplined approach and continue to monitor market conditions carefully. In Malaysia, we are trying to accelerating the expansion of the Kambei brand. And in Singapore, we will invest selectively when market conditions are favorable. Both markets, Singapore, Malaysia, play an integral role in a regional growth strategy.
Okay, thank you for that. I think a related question from Milan, that is a live question. So how are you looking to strategize your business, given that it is very competitive in the F&B industry, particularly being able to cater to the Singapore market and consumers?
Okay, let me answer the questions. For our food retail business, we can provide several types of business models. Directly owned restaurants, collaboration restaurants, and consulting. In Japan, we are focusing on directly on restaurants. And now we have our own brands and know-how. So by using our brand and know-how, we can provide the brands and know-how with third parties by using the consulting models. So in Japan, we would like to grow this consulting model. This consulting model is asset light model. We don't need to invest in the restaurant capital investment. So we will be able to grow rapidly. And for Singapore and Malaysia, and we are doing collaboration models. Let me explain the detail of the collaboration models. If there is a Japanese restaurant owner or company wants to expand the business overseas, but if they don't have the experience in operating the restaurant overseas, they will have a trouble. And if they want to open a restaurant, they need to establish a company and they need a capital injection. But in that case, we can support. We have a lot of experience operating a restaurant in Singapore and Malaysia. So we will be partners. FIS, which means the subsidiary in Singapore, for example, will do investment in the restaurant, partners restaurants. For the partner, only needs to do a daily operation. This will give us a good synergy for the expansion in overseas, Singapore and Malaysia. We like to use this collaboration model in other Asian countries, for example, Australia and Vietnam. By using these collaboration models, we now have several, this is brands. Because of this collaboration model, we have several types of brands. If one of the brands is not doing good, we can switch to another brand. So that we think that this is a low risk to us. Again, we would like to use this three business models. So we'd like to expand food retail business in Japan, also Singapore, Malaysia, and other Asia countries.
Okay, thank you for the explanation. I think we also have a few questions asking about some of the key trends in the F&B sector. So this question by Mr. Ng, do you see any trend towards online ordering and home delivery? And how is your business positioned for this trend?
ゆみさん、俺が行こうか。
あ
私が答えようか。
そうです。訳してもらっていいですか？すみません。
すみません、見とりました。はい。で、今トレンドとして、そのオンラインでのオーダーだったりっていう、そ
はい
のホームデリバリーなどが増えてるということなんですけれども、
はい。
それに、そのトレンドに対して
うん
ビジネスはどういうふうに、モデルは、考慮されてますかということですが。
なるほど。
うん
業態によるんですけど、
はい。
例えば、デリバリーでしたら、紅白ですとか、
うん
ワンマンですとかはデリバリーに値するんですが、シンガポールにおいてですね、
はい
値するんですけど、やはり、焼き鳥ですとか、焼肉、 羊クラブなんかは、お客様が来ていただいてというお店ですので、もう小悪満々が、適した、賃料、適切な、立地があれば、展開していけるんですけど、どちらかというと、我々が、出店していくお店というのは、デリバリーよりもお客様に来ていただいて、楽しんでいただくような、お店を中心に、今後も展開する予定でございます。
ございます。So we believe it kind of depends on what kind of food that is. Like, for example, in Singapore, kohaku, that's tempura rice bowl, and manman, that's unagi bowl. That's probably suitable for both in-store and delivery, home delivery orders. But something like yakitori, yakiniku, those are more like people come to our restaurants and enjoy dining, at our restaurant. So we focus more on those type of Japanese food, and we plan to open more restaurant because our focus is, more restaurant where people come to our restaurants and not just enjoy our meals, but atmospheres and other things.
Okay, thank you. So given the focus on the restaurant, there are a few questions around the cost pressure. So the first question is, how are you managing rising input cost and inflationary pressures?
ユミさん、すみません。もう一個お願いしていいですか？
はい。今のところ、コストが賃料だったり人件費だったり上がってるというところなんですけれども、
はい。
そこに対して、どのような戦略を出ていますか
はい。
というところです。
シンガポールに関しては、賃料のコストが非常に、上がっておりますので、我々も、出店立地の獲得に、賃料の、えー適した出店に、特化してますので、今も、えーお話ししていいのかな決まってる物件とかもあるんですけど、あの、えなんですかね。シンガポールにおいては、大家さんとの交渉の末、いい賃料、安い賃料でお借りしている物件を選ぶと、いうのが、シンガポールの、展開の、一番のポイントにしております。はい。いい業態を作れば、あの、メインの、立地じゃなくても、やはり、お客様来てくれますので、はい。そういうところに注力しているというのが、一番、シンガポールでは一番です。はい。まずここまでよろしいですか？次にマレーシアについてちょっとお話したいんですけど。
はい、承知しました。
は
So
い。
in Singapore, we are aware the rent has been increasing significantly. So we carefully choose the location and negotiate with the landlord with our long experience in having business in Singapore. We try to negotiate our rent as low as possible. I mean, just like every other business owners and try to minimize our rent. And we believe if business is good, like if our restaurants are good, even if it's not in a prime location, customer will still come to our restaurants. So in Singapore, that's our strategy, and we'll talk about Malaysia next.
マレーシアについては、官兵衛が、マレーシアで今、豚骨ラーメンではナンバーワンとなるほど成功しましたので、いいロケーションでも、例えば、いいショッピングモールでも、賃料が安くて、賃料が通常よりも若干安くても来てくださいというオファーをいただいておりますので、そこで、なんですかね、出店に関しても、全店1年半の改修がかからないような、出店ができておりますので、え人件費もカバーできますし、スピードの速い出店ができております。
In Malaysia, our Kambe restaurant has been doing very well. Right now, our tonkotsu ramen Kambe is a number one in Malaysia. So even if it's a good shopping mall in a good location, we have offers with like a slightly lower rent, people, shopping malls invite us to open Kanbe restaurants. So again, like in Malaysia, just like Singapore, we try to negotiate and keep our rent as minimum as possible. And in Malaysia, actually, we've been successfully open Kanbe restaurants, and we recover our initial investment within a year and a half, which is pretty good for our business model.
日本の直営出店もマレーシアに近いです。はい、例えば、表参道のトラットリアには、表参道、東京の、表参道というメインエリアでナンバーワンのイタリアンレストランになりましたので、例えば今、チャット GTP で表参道で美味しいイタリアンを教えてくださいというと、ナンバーワンでうちが出ますので、同じように、マレーシアのカンベイと同じように、ショッピングモール含めたオーナーさんからいいオファーをいただいております。
And in Japan, it's similar to Malaysia. Like our new restaurant, Trattoria Niwa, which is Italian restaurant, we opened in Omotesando. That's a prime area in Tokyo. Right now, our restaurant is number one in Italian restaurants. If you search good Italian restaurants in ChatGPT, actually, you'll say Niwa, Trattoria Niwa is the good, will recommend our restaurants. So because it's been successful, just like Malaysia, we have offers from good shopping malls or landlord with a reasonable rent.
Okay, thanks for sharing what you're doing in Singapore, Malaysia, and Japan. There are some questions on any plans to expand beyond these three markets.
じゃあこちらも、じゃあ、お願いします。
で今のその日本とシンガポールとマレーシア以外の、今後の事業展開の予定はありますかということで
はい。
す。
目論見書でもお話ししてるんですが、ちょうど今、オーストラリアの設立準備に入っております。は
Yeah,
い。
we're,
メルボルンです。
yeah, we're in the process of opening up restaurants in Australia, particularly Melbourne area.
And is there any target in terms of how big your operations would be in each of this market, and whether any particular market is going to make up a more significant part of your overall target revenue?
こちらもじゃあ、すいません。お願いします。
今のその、おそらくオーストラリアは含まれないかと思うんですけど、シンガポール、マレーシア、日本で、その売上の、目標としているサイズっていうのはありますかということと、あと、全
はい。
体の売上として、そのどこかマレーシア、シンガポール、日本が大きな割合が今後占めていくっていうような見込みというか、
はい。
そうはありますかということで
わ
す。
かりました。それは店舗ごとの、売上ですかね。全体の売上としてお伝えしていいですかね。売上としては、やはり伸びていくのは、マレーシアと日本が一番スピードが速いです。はい。1店舗ごとの売上を聞かれてますかね。
おそらくマーケット全体の売上かと思います。
あ、そうですよね。そういう意味で
はい。
は、今年、の出店スピードも考えますと、今後、急速に伸びていくのは、マレーシアと日本です。
We believe, yeah, among those three markets, Singapore, Japan, Malaysia, we believe Malaysia and Japan's revenue will grow faster.
And across the different business models that you have, is there one business model that you want to be growing more than the others?
すみません。これも。
はい。今の、その様々な業態、コンサルティング、サブ
うん。
リース、あとレストランの運営とあるかと思うんですけど、その
はい。
中でどこを伸ばしていきたいっていうあるっていうのはありますかというこ
はい。
とです。
一番今後も含めて伸びていくのは、日本の FIJ のサブリースの、モデルとサブリースのファイナンシングモデルです。これが、一番伸びていくところでございます。 次に、同様にマレーシアの売上、利益も、確実に伸びていくと思っております。
We believe that going forward, our biggest growth driver will be FIJ, our Japanese business in sublease and sublease financing business in Japan, and also our Kambe restaurants in Malaysia.
And given that we are now almost coming to the end of tonight's session, do we have any final words from the management team of Food Innovators Holdings?
社長、何か最後言いたいことありますか？
はい。すいません。まだ発表前なので言えないことの方が多くてですね、下期も、しっかりとした出店と、え今期もしっかりとしたリターンを出していきたいと思っておりますので、皆様、ぜひシンガポールのうちのお店も含めて、フードイノベーターズホールディングスをよろしくお願いいたします。
Because we have because our half year result is not released yet, so there are things we would like to share, but we can't share tonight. But we will continue opening our new restaurants and trying to attract our customers and also give good returns to our investors, shareholders. So please come to our restaurants in Singapore, not just Singapore, Malaysia, and Japan, and we look forward to seeing everybody at our restaurants.
Yes, I'm a frequent visitor of Manman, so I'll definitely be
All
keeping a
this
lookout
time.
for your restaurant openings.
Thank you.
So with that, I'd like to thank Kubo and Shuji for tonight's sharing. We'll definitely be keeping a lookout for your first half results for the half year ending August to be able to stay updated on your company's updates. So with that, we have come to the end of tonight's Corporate Connect. And for the participants who have joined us tonight, I hope you found the session helpful. In case you missed any part of tonight's session, you can watch a replay on SIAS YouTube channel. You can also visit the SIAS website to get an update on the upcoming Corporate Connect webinars. Our next Corporate Connect will be held on the 7th of October, and that will be with OUE Read. So thank you once again for joining us this evening. I hope you have a very pleasant night. And thanks so much once again for the management of Food Innovators Holdings. Thank you.
Thank
Thank
you
you
very
very
much.
much.
Thank you.